All right, good Monday, everybody. It is January 8th, 2024 at precisealgorithmtrading.com. And let's dive in. It's our first full week of the markets, so this will be interesting. This is our Dow futures, and we've got a little back and forth action, but I think up more than down today. So here, yeah, just two trades today. One winner, one loser, and that's that. So, uh, need to get some new green dots here. So our equity curve will be putting in new highs, and I think that's coming soon. So here's our Russell 2000, and that's a positive day today. And we had one positive trade today. So that one takes away some of these negatives here. And the NASDAQ's finally lifting off, hopefully. I'll say that, and then tomorrow we'll get a pullback, but this is the kind of action we need to start getting to be able to get this thing to start climbing back up again. And today we had that many trades, and obviously a lot more winners than losers, and I'll take that, and hopefully we can continue on. Like I said, these pullbacks have been nothing but hard to deal with. This one's been a long time, so it'd be nice to start climbing back out of this. So that's the automated trading systems. The manual trading systems, let's look at those. So the S&P 500 today, this is the E-mini futures. So something, I had a talk with a friend today. It's looking into some of this stuff. Just to be really clear, this is the ES, that's the symbol, and that's the S&P 500 E-mini futures contract. And if you look at the way that this looks here, the high is 48.41 and a half, and if I put in SPX, the high is up here at the recent high anyway, is at 47.93.30. This is the S&P 500 also. So the SPX and the ES are the same thing. It's just different instruments of the same thing. So, and so is the SPY. So the Spiders is the ETF, the exchange traded fund of that. So I just showed you the same thing three different ways. I could go over here and flip this to a daily chart and decouple this and put in SPX right next to it. And hopefully you can see the scale's a little different, but this chart, the SPY and the SPX, look pretty much the same. This one on the right, the SPX, the price is 4,790, and or at least the top price there, and the one over here is 478.99. So this is an exchange traded fund, and you can buy a share of this for $478 or $479, and the one on the right, you can buy it, but it costs you $4,793. So what the market does is they have instruments that are available for different types of participants and investors and traders. So that's the SPY and the SPX. And if I go ahead and put in the ES, the slash ES, it'll take a second for it to accept it, because whenever I flip between futures and regular stock, it acts different. So this one is 4,841.50, and you can see it's pretty close in price to the big contract. This is a futures trading contract, so it has its own nuances that honestly, I wouldn't trade the E-mini futures on a daily chart. That's just me. But because, like I say, you can trade spiders and it costs you about a tenth of it. Um, so there's, like I say, there's just different reasons, different tools for using the same thing. And again, well, not again, let me tell you, if we put in the NASDAQ on the left in Q and over here on the right, so that one's $1,700. I'm sorry, $17,000, 165. And on the right over here, we put in QQQ. That's the exchange traded fund, where it's effectively got the same chart pattern, the same. I mean, they mirror each other. But the one on the right over here, the exchange traded fund is $412.92 at the top versus 17,165. Like I say, they have different um, valuations, but they effectively trade the same way. And yeah, that's the point. So let me flip this back and get these things back in line. And for what it's worth, these top ones over here, the ES, the RTY, the YM, and the NQ, those are the main indexes or indices. And that's the reason they're at the top. And then right here in the middle over here on the left, I've got SPX, DJI, RUT, and COMP down there. And I threw in IYT because it's the transportation index, which is that DJT up there. So I've basically got two different ways to look at these products. It's not intended to try to like be confusing on my end. I think the markets like to keep things a little bit confusing. That's just my bias and my opinion. But so now I've got the NQ on the left and the NQ on the right, but I'm back to the hourly chart. So moving forward, let's go down here and use the actual big contracts. The SPX today went up by 1.41%. So we got our snapback rally that I've been looking for. Actually, it's really interesting too that things were lower coming into the day. They didn't start really snapping there until the market actually opened. The futures were lower, so that I don't think that's showing up here at all, which kind of makes sense. Maybe there's a tail on this chart here. There is. Oops, went the wrong way there. So, anyways, the S&P was up 1.41%. The Dow was up a half a percent, almost 0.6%, 216 points. And you can see that's a rally as well, snapback rally. Although we're up here, as far as my candle colors go, they're red, so we are, from a momentum standpoint, kind of pointing like we're still going to go lower. And look over here on the right-hand side. We've put in a high, and now we've come down. We've put in a series of lower high, higher low, lower low. Sorry, lower low, lower high, lower low. And now we've put in a possible another lower high. This is a place where even if this thing would break this pivot here, I hope you can see my cursor, my pencil, you could basically, I mean, using the right tool, in this case it would be the diamonds, DIA, you could short here or buy a put, and you could set your stop right here at this, up above this pivot, and as long as it doesn't break that stop, this is a great place to go short. And if you're wrong, so what? It's going to go higher, and you'll take out that. But if you're right, man, if this thing could fall way down here to this dashed line, which is my expected target at this point, and that would be a heck of a trade. So, same thing goes for the SPY, or the SPX in this case. This looks to me like a snapback rally, and like we should probably get a tail tomorrow of some sort, kind of maybe a doji. It could take out this pivot. Let's look at SPY instead of SPX. It could take out that pivot and just be a probe basically to go up and try to take out stops. And if that's the case, you'll still probably get enough action here where you could, if you got the high right here, you could still probably short against it going into the end of the day so that this thing could go farther, like I say, fall down. Right now, the reason I even am bringing that up is we finally have something that's starting to look like it might unwind to the downside. We got the on the hourly chart over here. We had the lower low there, but then it came up and put in a new higher high. Now we've come down and we've started unwinding possibly to the downside as far as the zigzag market structure goes over here. So yeah, let's keep going. That was the S&P and the Dow. Then the Russell, what's it doing? It's already snapped back up just like the other one, and it looks like it could also still roll over. Like I say, and I've talked about this a couple times, we've come way too far, way too fast in this rally, and now we've really, for the institutions to want to step in, this thing needs to be unwound back to at least 50%, which I'd have to actually do the math. It's one of these two lines. It's probably that one. But undercutting the 50% line is a place where institutions would step in, and that's where they'd be looking to buy because they want to get it at a fair price. And this rally up here, everybody can see it. They can see it better than we can. They've got better tools and better. I mean, that's their job. So, that's the Russell, the Nasdaq. Nice rally. Like I say, just enough rally hopefully to get our bullish positions back up off the mat, and then we can put in some bearish positions to keep going forward. And this one actually may even looks better. You can see it came right back up to the 50% line, and we'll see if it just rolls over from there. The transports, a little pop, and again, that looks pretty much the same, like it wants to go down. Now, I threw the stochastics on here instead of the MACD because I actually got enough of what basically momentum is doing. That's been my other two studies. I really think the stochastics is going to give me a better look at short-term and long-term moves, swings, or really market swings, I guess is a good way of looking at it. And as far as overbought and oversold, I'll be able to see it a little bit better. So we'll see. That's what I put in there, and let's go look at oil. Oil took a negative move if you're bullish, and I was, and I still am. And the USO is where I've got actually my position lined up here. I'll get rid of some of these drawings because they're noisy. And we'll just see. I mean, we got to move lower quite a bit, but then it did start pulling back up off of there, and my stop is in place. So, and really after my stop, if my stop doesn't get hit, then really all of this upside here is possible. And from a trading standpoint, I'd really like to point to the fact that I got in somewhere around here. So I'm risking from, let's call it 69 to 63.80. So let's call that whatever, 680, and my potential reward is all the way up to at least, I'll say, 81. So I mean, that's, I don't know what the math is on it, but it's well over a one to one risk reward ratio, which is a common target to try to hit. In fact, I'm going to say it's 4 or 5 to 1. So, all right. That's oil. Let's look at gold. I don't even think I'm in gold anymore. And that looks like a bad piece of data right there. Let's go look at slash GC. Yeah, that was a bad tick on the gold ETF. So yeah, gold's looking like a potential head and shoulders pattern here. And if you don't know what that is, you can look it up on the internet. But effectively, this peak right here in the middle is the head with two shoulders on both sides. And the target for that, if it was to break, I'm going to go ahead and draw in a line from here to there and connect the heads and the shoulders. And technically, we have broken to the downside because of that break right there. And the target's going to be from the center line all the way up to the tip of the head, reversed back down, which looks to me like it's going to be about there. So I am going to go into the gold contract, GLD, and put myself an alert at or above and at or below. So I get an alert both ways, and then when I get a chance to be in front of the markets, if this thing is broken to the downside and is messing around in this area right here, I'm going to short it, put a stop in above this high, and look for this to come all the way back down into this neck of the woods down here for what's at least a 1-to-1 risk reward ratio. And I will do that with puts so that really I can risk about, let's call it 15% of what a stock position would cost. And so I could actually do it without a stop and for the same net potential reward. All right. Let's get out of all that. That's the rest. That's the stocks for today, and we'll go over here to the bullish percent indexes. This is stockcharts.com. Type in bullish, and these are the various indexes, but they also have some sectors. So here's the industrials. They didn't move today. Here's the NYA, up 0.23%. The transports didn't move today. The NASDAQ, minus 0.24%. The NDX added a new O to the downside today at minus 1.37%. That was the NASDAQ, I believe. The S&P flipped over to a new column of O's. So we've been looking for that. It broke that 74 to be able to print the reversal. And it went down 0.8%. Does that mean this thing's going to fall off the map like all at once? Not necessarily, because now it can just really screw with people and move around in this zone without putting in a new 3-box reversal to the upside. Or if it does put in that 3-box reversal to the upside, that'll really have people scratching their heads, and then it can roll over. Or sure, it can just roll over. I mean, we just went through what the charts are looking like. And The OEX is the S&P 100. Didn't move today. And the NDX also put in a new O to the downside, minus 1.37%. Did I say the same thing twice with the NASDAQ? Must have looked at the NDX. Sorry. So yeah, the NDX and the S&P are the ones that are really bearish right now. And the S&P flipping bearish actually gives us real potential for that fall that I was talking about. And then we can watch it for a reversal back up again when we get to some of those levels that we're kind of looking for. So that is where I'm at for today. Hope everybody's doing well in this new year. I know the first week was rough, but we will have better times ahead. So take care, guys. Good trading, and have a great night.